Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, April 24th, 2020. It may be my last video of the day. I'm considering cutting out early. I made some comments under one of the front page posts. I believe it was to last night's end of day closing market wrap video, where basically, among other things, made a few comments under that one. But I said today, look, today's Friday. Friday, right before weekend, traders have 2 extra days of overnight risk. So typically anything that happens today is likely to really not mean much. In other words, you have a higher chance of any breakouts on any indexes, stocks, anything like that failing towards the end of the day. Some traders, a good part of them, will close out positions or reduce exposure before the weekend. Again, you have anytime you're a swing trader or an investor, every day the market closes you have a overnight risk, but on a weekend you have 2 extra days. So and here's the thing too, is the market's just flat. It's floundering around. So that's why I didn't put out a pre-market update today. I struggled. I went through the charts and there was nothing there. So I started to dig down looking for trade ideas. I'll pass a few along today. In fact, I did. I put a trade out on DPC, Domino Pizza. Keep in mind, and I mentioned on that post that we're in earnings season, so sometimes I might forget to do this. I try not to, but in earnings season I try to look and see if a stock's reported already. What you don't want to do is go long or short a stock a day or a week before they report, for two reasons. Number one, usually a stock will go kind of into a holding pattern before that, with everybody, waiting in anticipation of earnings. So stocks usually don't make a big move right before earnings. Again, it's kind of going to holding period. And on that too, on that similar note, that any breakouts that occur or breakdowns, it's been my experience, they have a much higher rate of failing if it happens right before earnings. For that same reason, you're not going to get a lot of downside or upside follow through, and nobody wants to take new positions right in front of earnings. So the takeaway is, if I don't make mention on a trade idea, if I'm going through these in videos, and a lot of the times I do videos, I'm looking and showing setups, but if I make it official, I'm going to do my best to scrub it for earnings. But if I don't, you need to do that. And there is, hopefully you guys all know this, there's an earnings calendar on the site. If you click on resources, that brings you into the right side of the chart support center. It's going to be different here if you're logged in or not, just FYI. There's account settings for you and all that good stuff. And then tools of the trade. I use this almost every day, particularly during the earnings season. You have an economic calendar here, which is great. Click on that, it'll tell you what the reports are coming up for the week or the day. Click on the report itself. Like today we had durable goods report at 8:30 a.m. before the market opened. Consensus was for a drop of 11.7%. The actual number was a drop of 14.4, but still within the consensus range. You can kind of look at stuff like that, and you might say, well, if we came in below consensus towards the lower end of the range, why was the market up? Well, X transportation, you can see that number actually beat consensus. It was down, but not down as bad as expected. And then core capital goods. So anyways, good stuff there. And also there's the earnings calendar, and this thing right now is a trader's best friend. This is from Earnings Whispers. Let me move that down a little bit. You can see, you type in a symbol. So if you're DPZ, for example, which I mentioned as a trade today, you do that, it tells you that they reported on April 23rd, so that one's out of the way. If you type in something else and you don't see it and the date's far out, it means it already reported. And also keep in mind that I've noticed that when you're looking at earnings out quite a ways, they're kind of guesstimating. That date is not always 100% accurate. If you want to be certain, whatever date they're reporting, go to the company's website, and somewhere on there, almost all companies have news, investor relations. Usually find it down on the footer, the bottom of their website, to get to that information. Okay, back to the charts. Let's talk about this and what we're looking at today, or what I'm watching today. So the bigger picture is this. We've been locked in a sideways trading range for 2 weeks now. You can see from early April up until today. So it's go nowhere. Bulls nor bears are winning this, and I just want to say this because it bears repeating. When the market goes into a trading range, You need patience. Swing trading is very difficult, long or short, obviously, because most stocks tend to ebb and flow with the broad market, especially those that are indexed stocks that are part of the S&P 500 or Nasdaq 100 or anything like that. So if you're frustrated lately, or official trades are kind of stalling out, that's a function of this. Swing traders, if you're short individual stocks in the market here, you're doing well. If you're long here, you're doing well, generally speaking, and you're getting quick gains and immediate gratification or close to it. And here it's just patience pays. Also remember, on a video a couple weeks back, I went to talking about retracement levels, and I was on the weekly charts and looking at previous bear markets and retracements like that, and I honed in on QQQ, for example, I believe it was. It's not on this chart, but what I showed you at the time is in the previous bear market rallies, which were these are it's been spanning decades, this is only the third bear market since the start of the 2000s. And that first bear market rally and the second one, we both retraced about 61.8%, give or take, on the Nasdaq 100. And both times, as I mentioned, we hit it once and then we hit it again, or traded on that level, pulled back a little, and traded mostly sideways for what was it, about 6 or 8 weeks or so. And so I said, that's a possibility this time around as well. And so that's something to consider, is that, as much as we've been consolidating lately, we could continue to consolidate a little more, or we could break out to the upside or down to the downside at any time. So you just have to kind of be ready. But a day like today, as I said in the comments section below yesterday's post, nothing much is really significant. If we broke this today, especially right before the close, is it a breakdown? Yes, but you want to take it with a little bit of a grain of salt, because again, weekend, you get position squaring at the end of the week. You could have some sell imbalances as we head into the close, or some buy order imbalances that bring us up. And then the bigger picture I showed you today, put a detailed post out on the semiconductors via SOX, some of the leading semis, and QQQ, and the charts are all very similar. That's not by coincidence. Again, QQQ is mostly tech stocks, and the semis are one component of the technology sector. And so I gave you a couple scenarios, and the more bullish of the two just has another bounce up, and if it's not going to change anything technically. It's going to, at least not if it's a marginal new high. If we go much higher, it does. It negates or takes out these divergences. But should we pop, we're at trend line resistance, and now this trend line has 4 reactions, so it's pretty valid. I had it, and you probably noticed in some of the recent videos, it was tuned down. You could barely make it out. That's because we only had a couple reactions, but then we had a third, now a fourth. So the more reactions, the more valid it is, and that's because more traders are going to watch it. And if it breaks, that's going to give us a sell signal. And remember, we already had a divergent high, so we could break before we make another one, or we can make another one and then break, or we can make another one and keep going. So that's it. I still favor this downside, but let me tell you a few things that's going on lately, and it's probably just a function of the market consolidating. This isn't waffling, you can call it that. It's my convictions right now, very near term, are a little less strong than they were a few days ago, but I still favor the downside, and here's why. And again, it's mostly a function of the market just being in that consolidation mode. So you kind of take a step back, or at least I do at this point, lighten up on trades, put a little less stock into breakouts and breakdowns. But what's going on here is we broke down, as far as the bearish case goes, we had this rising wedge, same as on QQQ, and we broke down. That was a sell signal. But what happened? Number one, we didn't follow through. It wasn't impulsive. We back tested and then reversed, but we didn't really go anywhere. We consolidated. We traded for a few days. Then we started moving lower. We took out some levels, and I thought that would be it. And we started forming this downtrend line here. So the optimal bearish scenario would have been, at best, we kick back, and I mentioned at the time, thought we'd get rejected there and continue lower. In other words, start a downtrend from this point, remain below this downtrend line, but that didn't happen. We broke out to the upside. We took out first that downtrend line right here. We held this uptrend line support, and then we actually broke out of that 86.90 levels. Where I'm going is, I'm just seeing whipsaw city, one buy signal. This was bullish when we broke out here, and the fact we held this trend line. Then we failed it, and as I mentioned yesterday, that's a false breakout right here, aka bear bull trap, and that should have kept us going lower. But look, we've come and back tested here. So what I'm getting at is you can trade off these. There's a play to be made here, and these are the same levels I've had. I haven't modified this chart since at least yesterday. Any of the lines, I don't believe, and maybe even before that. So if you're an NQ trader and you shorted the failure back up below 86.90, or you had a beautiful short entry there with also a break of the trend line. They came in together, and that was good for, I mentioned, drop of a couple percentage points, whatever it was, down to that same level I've had here for a while, 85, 84, 85. So we are playing ping pong. Active traders can game these levels, and although you're not getting the big 5, 6, 7, 8, 10% rips and dips like we were when volatility was much higher, there's plenty of money to be made if you want to do that. But for swing trading, it's frustrating. Swing traders, less active traders that aren't nimble and can't jump in and out on these 60-minute charts, it's going to require a little patience here. We'll have to see which way the market breaks. Can it power on up through here, take out all the divergences, shrug off these divergences and bearish setups, come on through the next resistance levels on the daily and weekly charts, or are we going to go down? I'm still favoring that, but right now, again, we're not seeing this action's clearly not bearish. We have some bearish technical postures, but we've had a lot of opportunities to continue lower, and the market just kind of, again, it's doing this zigzagging thing. And all I'm trying to say is that obscures the near-term picture. It certainly doesn't, strongly solidify the bearish case, because we've had a lot of opportunities to continue lower, and then we take out these upturn line. We have some near-term bullish developments. So kind of sitting back, taking things light. That's the takeaway. That's what I'm trying to convey to you. And let's see where we pick up next week. If it's more chop fest, that's it. There's something I would say you don't have to be what I call ABC or ABT. When I was in sales, be a broker, at a sales manager, and he would pull the old ABC, always be closing. That's the line from Glenn Ross, great movie if you've seen that, or the play on Broadway. Anyways, that's in trading. I say you don't have to ABT, always be trading. There's times where you want to sit back, and these are the times you'll get chopped around if you don't know what you're doing, and especially if you're trying to swing trade, and capture 5-10% moves. They're going to be harder to make. Now, I did add DPZ because for the reason I thought it was objective, and for the reasons I stated, and who knows, maybe we'll continue. We have a breakdown here below the trend line. I also showed you that on the daily chart, and you can see it there. We're below trend. They've already reported, earnings are out of the way, and to me it's a simple wash, rinse, repeat thing. It's no more than that. Wash, rinse, repeat. There's no guarantees in trading, but I look for these divergent highs, and they are good for, in the past, these drops measured about 25 and about 25%. So will this time be different? Maybe. And if so, then I'll lose as much as 7% or so on this trade, and if I'm right, I'll make 19%, maybe even more. This, like all trades, if we start to take another leg down in the market, I do believe the lower we go, the more it's going to increase the chances that we're going to have a big run at and probably take out those recent lows. And point is that all the most of the swing trade ideas on the site right now, be it long or short, have the potential to for me to extend the price targets and let them morph into an even longer term trade. Dominoes could be all the way down here easily, 220 or so. I don't know if you can make those levels out, and that'd be a much larger drop. All right, so that's that. Let's look at a few others. We're on food. I'll talk about Beyond Meat. Last couple years, I posted trades in the trading room. Most of them were in the trading room, unofficial swing trades, because it was an IPO. We didn't have a lot of history, but I've slayed this stock with impunity, shorting it on that first big drop, on the second big drop. You can use a search function. The post by ticker won't find that. If you just going back to the how to use the site again, I like to do that from time to time. If we go back to let me go back to the support center. If you're trying to find what you're looking for, if you come on that support center at the bottom, type in your symbol tag, and BYND will pull up all instances of BYND on the home page. So silver members as well as gold members can access this. These are official trades or any analysis that I might have covered unofficial trades. But then if you want to find it in the trading room, or all instances, whether it's from me or somebody else, again, this is only going to be posts from me on here. Then you come to the search function. You can see right at the top. These are results from the home page. You scroll down. These are from post comments, myself or others made below. And then these are results within the trading room. So you can see levels here and all previous trade setups like that. But where I'm going with it is I haven't touched stock in a while. Well, you can see we had a big divergent low back here. That was bullish. That probably would have been high. I don't know if that might have been an official trade back then. I can't recall. But here's where we're at. We're at a pretty decent downtrend line. We've rallied up since the lows. This one's up quite a bit. I suspect a lot of that has to do with, there's fears that we're going to see a big increase in protein prices, pork, even cattle and all this with supply chain disruptions. Tyson, Smithfield, and a lot of the big, producers, chicken and poultry and beef are, shutting down. You're having farmers having to put down livestock because livestock are bred very specifically timed to meet demand at the market. And if you get the plants shutting down that can't process the pigs or the cows, then that's going to create a shortage there. And so anyway, I think a lot of that's priced in. So if meat prices go up, maybe that's those people are kind of not hardcore vegans, but we'll eat, say, look, I'm not going to buy a $20 steak right now, $20 a pound. I'll buy this Beyond Meat burger or whatever. I don't know. Either way, how much of the big run up, stock has already rallied 136% right into trendline resistance. And so you can see here we're overbought. Last time we were overbought was right here. I always caution that overbought in itself is not a sell signal because sometimes you get overbought and then you become more overbought. But really didn't exceed that reading there. Overbought here, boom, and overbought here. So there's the only times in history the stock was overbought. I know we shorted at least these two. These were trading room shorts there and milked it to most of the move down too on one or both of those. Can't remember if we did it here or not, but that's where we are, full circle. And again, overbought in itself is not a sell signal. So you might say, well, why would you mention it? Well, overbought at resistance is. So if it takes out the trend line, you also have resistance here. I'm not crazy about that's an old level here, 121.16, because we had a gap right there. That's why I had that line, and it did act. You can see a support there. That might have been a target to cover at, or down here. But we kind of traded through it here. So, what I would do is say maybe that's a level we might get a reaction on, but it's a little less significant. It was more significant back here, but the fact we've traded through it quite a bit takes away, in my opinion, some of the validity of that level. 139.77 is still a big level, around there, give or take. Maybe even lower that down just a bit to come in at that old reaction high right there. So look, if this one pops this trend line and keeps going, I might mention it again as a short. It's not an official short entry. I can't make a screaming case to do it. It's also pretty aggressive stock. So just one I wanted to pass along right now. I'll wait till next week, if anything, to see how it's doing and maybe make a decision then as if there's an objective short entry to be had. Another one that just stood out to me, it's not a food company, it's a tech stock, is VNet. 21 VNet Group. Never even heard of them. I don't recall. But I did mark the chart up here. I might have already had some levels on it. Yeah, I did, because I must have traded this one in the past, or at least posted analysis on it, because those are old levels. I must have done these way back then. In 2018. But that's it. It's kind of same wash, rinse, repeat stuff. Things I look for here. Back here, you had negative divergence right there. You had negative divergence, a little rising wedge. I always say, divergence in itself is not a buy or sell signal. There's your divergence line. It is merely an indication that a trend reversal is likely, and then boom, you get a sell signal when you break trend. So there was your sell signal, and from there to there, that stock fell. Didn't even grab the high, so I'm going to go a little lower, about a 50% correction. Here we had divergence, and like I often talk about, sometimes divergence builds. We had a divergent high there, and we did have a nice correction. The divergences continued to build, and then finally played out for an even bigger drop of, again, 50%. So here's a stock, high growth stock, and this is what I talk about with the whole tech sector and the semis and everything I've been harping on lately, that I think a big awakening is coming in the market soon, tech sector in particular, that technology stocks are not immune to the sudden crash we've had in the economic indicators in the business cycle. And so high growth companies tend to go up very good. Yeah, they're great to be long when they're rallying. 133% rally there, 132. Look at these cycles; they're almost perfectly measured out. 133% gains both times and 50% drops. Let's see what this one is. I'm curious. I didn't even look at that before. We rallied here a little more this time, 174, and where does it go down to if it does correct? I'm going to give you one more level right here. I'm going to put that line about right there, give or take. I think that's a potential target, as I do right here. That would be my first target, and depends on where we break down. Your sell signal coming to break of the trend line. From where we're at right now, roughly that's about 14% or so drop to that first target, about 20-30% there. And you could easily see this stock coming back down here. I mean, remember, if the market revisits the recent lows, only stands to reason a lot of these stocks, particularly tech stocks, will also revisit the recent lows from March right there. And so just a second, another test of those lows would take us down about 43% on this one. So there it is, and it's what I call a setup. Why? Because you're still above trend. We do have, this is called a bearish engulfing candle. When the body of a candlestick, you get a big red candle that engulfs the entire body of the previous candle, that's called a bearish engulfing. That's a potential topping stick. So you could, in my book, I always like to, or at least my way I like to trade these, I like to see a confirming red candle the next trading session. That would be Monday. So, and of course, we still have to finish the day. This candle has to close down below that previous one. So you need it to engulf by the end of the day because it's a daily chart. So we have another red candle tomorrow. You could take a starter short position there on that sell signal. That's a candlestick reversal pattern, a topping pattern, and then add to that position on a break of the trend line. And that one big divergence, I'd probably just if you're not an active trader, just ride out at least through the expected bounce off the first target or even second target and hold out for that 30, 40, 50% plus drop. Looks something like that. All right, so that's just one of many, and I haven't scrubbed it for earnings, so you may want to make sure you do if you decide to take that one. All right, guys, there's just really not much else that stands out to me right now. Everything's kind of status quo. All our official trade ideas are, I'll need to add dominoes to this list, are kind of status quo, back and forth, up and down, either slightly profitable on some of the more recent ones or slightly negative. Here's Autodesk up today. That's a short. Berkshire's a short, so that's positive. We're up on that. Costco. See, kind of flattish. Gold's down a little. That's one I mentioned. We got to watch. I told you there's mixed. There's some bearish technicals. A bearish case can be made on the near-term technicals, and even this daily chart still below that trend line. I already went over gold recently, but the bigger trend is still bullish in gold for now. So we'll watch that. Like I said, I was cautiously bullish, meaning it's a long-term trend trade on the site, so I wouldn't be adding to it now. But if I'm, for those of you in it, like me, as a longer-term position, I'm holding tight for right now. I'm willing to ride out any counter-trend, corrections, if you will. That's it. I don't see anything else here that really needs updating. I already covered the semis. I already covered, all these trade ideas recently. That's about it. Let's wrap it up here. If anything big happens by the close today, if I'm home, I might run out and do some things. But if so, I'll do an end of day update, and if not, we'll pick it up here on Monday. This has been Randy Finney with Right Side of the Chart. You have a great weekend.